Hey, it's Mac with PriceActionTradingSystem.com. It's Monday, it's August the 19th. This will be our chart lesson for today. And I see this as a range day, really. It really started out as a tight range. And notice the fell out the top, then the fell out the bottom, and then we finally broke and tested the upper side. And it's really kind of two levels here. And we're tried to break to a third level, it looks like, but prices are trying to go higher now. Whether or not we'll go lower, we'll just have to see. But that's what I saw. There's a clear channel, even though I was really looking at this more as a trading range, but you couldn't ignore this little channel right here, and you can see we got the break, and then we had two legs down. We didn't quite make a new low. But that's because I believe the trading range was really, there's too much support right here at that point. And then we reversed and kind of worked higher. It got a little tricky right in here. And some people were, one thing I'm getting a lot of lately is people are saying, hey, like this right here, you see there's a new low there, there's a first entry short and a second entry short, and it ticked higher and kind of failed. So people wondered why, going long there was a failure. And then there's actually a two-legged pullback kind of to the EMA and a second entry long and another failure. But if you look in there at all that overlap, by the time that second entry set up, I mean, on a strong trend day, I'd say, yeah, you'd want to take that second entry. But this is a trading range. And there's resistance right here. Then there's also resistance off of, if you drew this line off those first couple of, once this high was here and then we touched it again and then we couldn't even get up there that time. So that would have kept you a little bit, that should have made you a little bit leery about going long there. Even if you didn't see, even if you didn't draw that trend line across there, you still should have had the fact that, that you got this resistance area with this trading range, and that's, so you got to be careful. Just because you see a failed second entry in one direction doesn't mean you automatically take it in the other. You have to look at the context, and really, to be honest with you, you should have seen one or the other there, or you should have at least realized that we had this little channel here and a break lower. That's a double bottom, and this is a higher high. And so, that might be making you think you want to go long, but you need to get more of a correction than that. And that didn't come until right here. And I didn't even like this trade. I'm probably going to go ahead and circle that in green because it is where you would want to go long, but it's still a little risky in my opinion. It's not a great bar, and I'm just going to make it green. But if you drew this trend line up through here and you copied and drug it down, it's a bounce right off of it. And so you notice you got another bounce here. But now you've had a couple of tests of it. And that's what I try to tell people all the time. They'll draw some trend line that doesn't make sense. Wait till you get a test of it. This is just your first test. This draws it, and this is the first really confirmation. So if you get another bounce off there, you might want to take it, but notice nothing ever triggered on that one, at least not on my chart. There may be some charts where it did, but hopefully you got in if you noticed it. But look at all that overlap. That's another reason not to enter right there. So I can't believe all the charts would be that much different. So obviously I realize all the bars aren't exactly the same, but it shouldn't be that much different. If there is, you need to probably take a look at your data provider or something. But anyway, just because you see a failed second entry, the whole idea behind second entry traps is that they fool most of the people. So looking here at that move up, there's more people apt to get fooled to the upside than the downside there. And so hopefully you can see that and understand that. So let's go back and talk about the trades. But overall, it's just a trading range day, and you can see it wouldn't surprise me if we made another equal move down like this one. But then again, it wouldn't surprise me if they don't trap people to the short side and then move back up here either. So just wait for the right setup. Don't be trading until you see a good setup. Let's talk about what we did see. And you got to remember the market moves in twos. So, you know, you're moving down here, you make a new low, you got a first entry short, and then a second entry. That's two legs up, but we broke the trend channel. It's back up here at the high. It's a nice little reversal bar. You go short right there. It took a minute. You had to fight that little pullback, but it moved on down. And then you got a second chance, even better trade for a second entry short there, to ride that one down, and that one was good enough for just about enough for the scalp, and that's all you could get. And you had to be careful here but this support had moved down at that point, so it's sitting right there, and you see we're back inside that little area, kind of bouncing off that line. But by that time I had this line moved down, but for the big picture I think it's right here. So you had to be careful of that, but that gives you enough room before this next low to scalp out, and you see where it bounced exactly where that low is across there. Then you're moving up. You know, it was more tempting to go long here really than here, but you can't be going long there because now you're bouncing at that same place. You're finding resistance. There's just not enough room to scalp out. And then you get a second entry long. It fails. It turns down. So if you took this trade right here, you're okay. Even though it came back, as long as you kept your stop above the signal bar, you're okay. But that's not a very good signal bar. And then you get this set up, and boom, off it goes. And what you're looking for is a scalp off of this high and scalps off the lows. And this was the first time you really knew for sure you got the double bottom, and then you bounced there. So that's why I like that trade right there. You already got a kind of a double bottom with 1, 2, 3, 4 test of it. Now you get two more, and it turns up. And that was a nice, easy move. And technically, any of your runners would have been safe, depending on how you entered this one, and you could have ridden this all the way to the top. But I drew this one in green because you didn't really have a previous touch of the trend line. I took this trade. I like this trade. But I used a limit order here, and I had to chase this one a tick or so, but if you use a stop, it still would have worked all the same. But you have enough room really to scalp out before you get back up here if you used a limit order, depending on how you entered that. But I'm guessing that most people didn't see this line here unless you've learned how to find them off the top side. And even this one was a little bit tricky. But you need to be able to, that's what I always tell people. If you can't find it down here, try to find it off the tops. And what I did was I drew it off those closes right there, those two closes and that close, and it gets real close right there. And then I drug it down, and it bounced perfectly right there. And you could have even drawn it right there. It still kind of fits. But that's how I originally drew it. And learn how to find it off the upper side. Sometimes it's real clear, like here. This was real clear to find this to drag it down to the low side. And then there turns out to be kind of a median line in here. So then we get an overshoot. This is the one you got to be careful. This tripped up some people too. And notice you got a new high, first entry long, pullback, second entry long. You don't want to be taking a second entry here after this overshoot, especially with the possibility being that you've got your other side of your channel up here. And if you measured that channel, that's what you would have gotten for your target. And so you're figuring prices are probably, you're going to be looking for your entry down here unless you get a real good entry here. And there's just not a good entry. There's a second entry right there, but look, it's a little doji, and then this one ends in a doji, so you got a chance to get back out right here, and it closes off its high too, and then just more dojis across here. And so then I don't like going short or long. And guess what? You get a failed break lower, so you got a reason to enter long right there based on that failed break lower. But more than that, you got a confirmation that this trend line, look how it bounced right there, and you got a nice bullish bar. So good place to go long, easy scalp. You had to take this into account right here as well. Originally I had this one drawn like this. And you see we did get a break right there with a retest of a low, so that would have kept you in too. But I believe this was just a larger portion of this that, after you get to watching this form some more, then you kind of adjust things and you can see that. and then we don't go much higher. We can't even get back up here to test these highs, and we're turning down again. But I don't like any longs right there. This was the first break of that trend channel, so I was thinking we're probably going to make another run for a high. But what the main reason I like this is you get a little bitty doji right down here at the strong support. Dojis can be killers, but they can also be great, but it depends on the context of where they set up. If, you know, when they're at the bottom of a move where you got strong support, then they're good. Or if they're at the top of a move like here where you got strong resistance, they're often good. But when they're in the middle of a bunch of overlapping bars, they're usually terrible. Like right here, you might have thought about going long there, but you just came out of all this and you haven't quite gotten down here. You're right there at it, but you got this trend line that you should have found by the time you saw these, and you might have even drawn it off these lows. I believe I ended up drawing this off the lows, and when I pulled it up here, it fit real well. I just can't remember how I got that, but it was something of that nature. But you got a chance to go long here. It was good for a scalp only, just enough. When it actually made this doji and then made another one, and you know, and you may not have even taken it if you saw this, but I thought we were probably going to bounce and go higher. I was wrong, but it still was good for a scalp, because look at that move down. We're not selling. You know, what happened is most people sold the low down here when you need to be buying, and or either just sitting tight. But by that time, it's pretty obvious when we make this double top that we're in a trading range here. I didn't like this entry right here, even though it would have worked, because you got a new low. It's a first entry. It's almost always better to wait on the second entry that came right here, and even it took a little while to work down. But it's real tight. I mean, we really got kind of quiet in here. So I did like the second entry, and I didn't really like this one. This one I meant to draw in green, but I didn't change it. So let's draw this in green. I didn't like this one because it's just a first entry, but it is off that trend line. It is off the EMA. It would have worked, but they came up and if you didn't scalp out, they came up and ran the stops by one tick and then turned it down again. So I like that little trap of them running that and retesting that line right there and then turning down. You don't know that it's going to do this. I figured it'd probably chop around and get a scalp and go, but look, it runs all the way down really to the other end, and what that is probably right along that closes right there. And you can see it bounced perfectly right there. And then you come back, and guess what? You're getting resistance at this line again and at this area. So you got double, plus you got the EMA, so you got triple reasons to be concerned about going long right there. This was the last trade I took, and then I was done trading. And you know, you might have considered a long down here. You do have a trend line break and a move to a new low. There's plenty of room to scalp out before you get back. So I'd call that an aggressive move if you did take it. But, you know, some of your aggressive traders will want to take that kind of trade. And now you got a second entry short that's already met its scalp, it looks like, and we're working lower again. I'd be looking for a target that's a measured move like this unless we find support again right here. So that's, you know, that's what I'm usually doing. I'm looking for where, you know, I've said this a bunch of times, but a lot of people miss it, is that, you know, we're looking for trades to set up at certain areas, and we wait on prices to get there. Like right here, we're not really looking for a setup right here because we're coming off the highs of either the trading range or the trend channel. We're waiting on prices to either get back down here or to get back to this line, especially once you know that you had a couple of touches of it. So if it comes back and touches it again and bounces, you got to take it. And you can see it was an easy move. And it tried to bounce here, but it couldn't. It found too much resistance, and no trade ever triggered. And that's another reason I tell people, don't try to sneak in early, because this looked really bullish for a minute. I thought we were going to go higher there and get up to here and test that again. And guess what? It never triggered. Next thing you know, it's going lower. And so, and you see this one's going lower. We're finding support right there at a double bottom. Will we get through there and make a measured move down here about the same? I'm guessing that's probably a good chance that that's what will happen. But hopefully that all makes sense to you. And this really, you know, if you're looking at it, it looks kind of like a trading range, and it is a trading range, but it's got a downward bias to it, and it's respecting this trend line. And notice now every time it comes back to that trend line, that's where we're looking for a possible setup. And when it's trending up, every time it comes back to this trend line, we're looking for a possible setup. And when you get the trend line and the EMA working together, that's even better. So that's what I saw for today. There were several trades. All of them were, you know, they were good. And you just got to be careful. Once you go into this stuff, you got to, if you're not reading it right, you can get tricked. And you can see that several of these longs probably would have worked, but they're, you know, the bias is down. You can see the EMA pointing down. Even though it's choppy looking, look at the EMA pointing down. It gets a little flat right there, and then it turns right back down again. So watch that EMA, and it gives you clues. And you can see right in here how flat it was. And you can see that's just kind of a upper trading range. And right in here it was kind of flat. We were in this trading range. But then the bias was kind of up until right about here, and it turns over. Flattens out and then turns over. So use that, you know, that trend line, or I'm sorry, the EMA, but look for your trades at the, you know, at the EMA on, if it's a strong trend, you can see at the EMA, and I don't call this a strong trend, but everything's down and everything's below the EMA, and we're constantly going lower. So, but if you get a strong trend, like right here, you can see everything's below the EMA, and it's pointing down pretty steep there. But here, everything's up, and here everything's down. So, and you see, we pierced it right there, the EMA right there, and going down, we pierced it right here. So you're going to see some breaks of it, but generally, so it's not just because prices are now below, we're looking for shorts. You're looking for where the majority of the bars are. And you can see starting right in here, the majority of the bars are to the upside, and then it flips over. And, you know, it's not 100%. You can't trade off that. A lot of people get confused on that, and they want to trade on the EMA based on which side prices are, and you really can't do that. It's just a clue to help you figure out. And when you're on both sides like this right here, you know it's really a trading range. And then you start getting above, so you got a little bit of, and remember the two legs. You got two legs up here, and then you got two legs down, and then these two legs up are one leg, and here's your next leg, and there's a couple of legs in that one. So you got to learn to spot this stuff. It takes a little work, and you got a couple of legs down here, and then you really got a couple of legs up, and then a couple down, and then a couple up, couple down. There's your two legs back up, and then two legs down, and then two legs up. And so you'll see that over and over. Sometimes they're easier to see than others, but with time and experience, you should learn to see that. So, but anyway, that's pretty much it for today. I hope you had a good trading day. We'll be back to do it again tomorrow. So, good luck tomorrow trading, and we'll see you next time. This is Mac with PriceActionTradingSystem.com.